All right, everybody. Good morning to my American friends, North and South. Good evening to Australian, Asian friends, European, African friends. Good afternoon, late good afternoon, good evening. Way different time starting for me, typically. I go morning Baltic time, but here I am. See how long the stream goes today. Again, I'm working on a new sort of chart engine where I can help you guys see different things in the markets and follows along with all of my economic research for a long time, monetary based stuff. Let's take a look as an index at gold, silver, and Bitcoin. Hello, Felix. Good afternoon to you now, right? Just for fun, all right, say we started at 1 back in 1970. Gold standard was ending. Bretton Woods system was ending. For a bit there in January 80, you got up to 20, 30x if you held on. Silver returned slightly better than a 20-year bear. UK sold their gold right there. Brown's bottom. Canada sold it. Norway sold it. 2011 was a nice little run up amidst the quantitative easings, the Greek sovereign debt crisis, which still goes on to this day. From 1970, if you had held on, your silver would be back again at 20. But if you bought at 1980, you'd be break even. Gold would be at 50. 50 times. Back down, and then we have this nice mountain where we are today. Gold and silver only here. This goes out till today, but it's hard to get on this wide chart. Let's zoom it in from 2000. I'm going to reset it. Well, let's just say what it is. Okay, so 140 times or so. If you actually had a gold ounce or someone gave you a gold ounce back in 1970 and you're holding it till today, at least in my morning stream European times, I think there were some gold bugs that were still on this timeline. And 60x silver. Now let's reset it. Let's go to 2000. All right, let's say you start. So now 2000 is 1. All right, that means index starts in the year 2000. You get 10x. For silver by 2011. 6, 7x for gold. And now you'd be coming down from a high of 20 down to about 15, 16. Now, of course, the base matters a lot, right? Where you start with these types of analysis. But if we go into, Bitcoin land, it's just quite funny, first of all. Let's add Bitcoin to this chart. This is pretty buggy still, so let's see if it works. It should. Just a tongue-in-cheek sort of thing there. Your gold and silver returns, you can't even see them because those that bought Bitcoin back on Bitcoin Pizza Day, i.e., whoever bought those 10,000 Bitcoins for 2 pizzas would have this. I really need commas there, but it's hold on. It's either 3 million X or 30 million X. Doesn't really matter. I'm sure you guys know the math. All right, but let's sort of map it to, some even say that, you know, Bitcoin didn't get serious until 2017. So let's pick the 2017 top. Okay, now it's kind of interesting. If you started in 2017 when Bitcoin was 20 grand, now we're kind of interesting compared to gold and silver gains. Peter Schiff would like this chart more. But I want to keep playing the different periods here because I think it's interesting. So silver's still the outperformer on this window, 7x. If you bought silver, gold, and Bitcoin at the peak of Bitcoin's price in 2017, you'd have 7x gains in silver, 4x gains in 4.5 gains in Bitcoin, 4 gains in gold. So Bitcoin actually is falling quite rapidly, but slightly better than gold. So yeah, even with this retracement. Let's cherry pick again. Let's say not the very, very basement here. And I have a point to all this, by the way, because I know Bitcoin is diverging right now rapidly from gold and silver. Let's pick here. All right. From the 2019 summer spike in Bitcoin. So something like this, I would say, gives a flavor to, you know, James Checkmate said a while back that people think a lot more about their short-term gains and losses than they do about, you know, longer-term investments where they could be just killing it. Something like this, I think, starts to show it in the markets. Bitcoin is still really good, but silver and gold, maybe for the midterm, sort of clawing their way back, is fighting for this sort of store of value play. All right. So Bitcoin still, even with all the pullback, is up 7x from this point in summer 2019, right? That's what I picked, right? Yeah, June 2019. But if you went back just a few days ago, silver would have been up 7, nearly 8x. It's a wild, wild time here. I'll zoom in again. All right. Actually, no. Here's where I want to show, before we do that, let's look at 2021. Let's say you bought the top, and then let's see how long it took. People should know this who follow Bitcoin enough, but let's see how long it took to bottom out. All right, so wherever I zoom in is 1. All right, that's why things reset all the time. So gold and silver from the top of 2021, where Bitcoin was, actually lost value, sideways to down for a year, but Bitcoin went down big, right? 73%. Bitcoin was only 27% of its value. See that in the tooltip? 0.27. And it took a year. Took a year. So that's one thing to keep in mind. I might have to reset this because there's so much data when I try to take it back as far as I do for gold and silver. So I might need to reset it. Give me a second. . let's go. Hold on. What do I want to show you? One second. Yeah, it's still buggy for some reason. Just give me a second. Well, anyway, this matches. I'll come towards today, but this matches basically the time it took for our big puke in 2017. It's not coming out the way I want it to come out, but basically from 2017, December to 2018, December, again, a year. Bitcoin was down, not hold on, I'll pick the top. So I think it was actually maybe even slightly less. No, it was more, 80%, right? Peak to trough. All right, so now let's look with all three of them again. And let's just study. Let's look at this one. Let's study what's happening here. So is that where I want to start it? Yeah, we'll start it here for now. You can see this is a little bit of a work in progress still. Had a nice big boom here. ETFs started right here, up, up. And Bitcoin is still up. It's close enough, I guess. I wanted to go from the FTX fraud. It's a little bit, 6 months before this. But anyway, back to the point. Gold and silver are clearly moving, at least right now, the way the Bitcoin has moved, in the last couple of years. And if you just pick this date, summer 2023, 8 months after the bottom of 2022, silver's the winner. All right. Bitcoin and gold about tied. Okay. So Peter Schiff's very happy. Now, if we went down 70 to 80% before and it took a year, even though these three peaks were very different cycles, we'll go back to the power curve in a second. I know this is sort of a different way to look at it, but we sort of perhaps front ran the last cycle, all right, with the ETFs, sort of three big booms here. People thought there was going to be a really monstrous boom here once Trump took office. It went down, in fact, when Senator Loomis was saying things about, possible Bitcoin strategic reserve, yada, yada, yada. And I know there's legislation still out on that. But let's pick the top. All right, this is going to look bad for Bitcoin, but let's just see where we are. Okay. So from October, and this should include, I need to see exactly. This should be fairly recent price. Might be from a couple hours ago. Not sure if it's exactly under 70. We're under 70 now, I believe. We're under 70K. Right at it, 69.70. Anyway, 40% drop. 40% drop in 3 months. 3 full months. November, December, January. Gold and silver up. It is where we are. some people are probably saying, and I think it's probably good analysis, that the quicker Bitcoin falls, the better. Let's look again here. This word gets all messed up. Sorry, this should be extended. But it took us back in 2022 longer, right, to fall 40%, right? 40% is here. So that's a full 6-7 months after the peak of 2021, the second peak. Okay, so that, again, there, I think it's pretty good. This is going to look kind of wacky again, but yeah, sorry. Hold on, I think I can get a better zoom here, actually. Let's try it. Yeah. Let's do... ...2017 was a huge top, and it was a pretty significant drawdown as well. So in 3 months we went down 60%. Dead cat bounce. Or actually, dead cat bounce was no, it was here. Down into February, late February, March, dead cat bounce. But this was definitely the most 2017. All right, let's just go back and make it easier on ourselves. Here's the old power curve. 2017 was obviously the most pure, beautiful top that we had, and it was really just one, even though you had like sort of run-ups to it. And that's a 60% drop in 2 months. So again, in the interest of breathing and not trying to be too carried not trying to get too carried away with where the price is going, I would say the faster drop, the better. From October in particular. And it's sort of, slower drop than 2017, but a faster drop than 2022. Slower drop than 2018, faster drop than 2022, where we are right now, dipping below 70K. I know that we could use TradingView and all sorts of different lines on charts, but I just wanted to show you guys this because first of all, I want to try to bring better data with gold and silver to you with this stuff, but it's very interesting what's happening right now. Right? Silver exploding, gold exploding, Bitcoin dropping pretty violently. Maybe not the most violently it's dropped, but 40% in 3 months is a lot. It's a lot. Thank you, Satoto. So let's go back to the old power curve, see where we are. Right. I know the price is bouncing around ferociously right now. We're above 70K. When I pulled it into the model, it was below 70K. So we're between the 30th and the 40th percentile, which means, based on the power trend, we've theoretically only 30% of the time it would drop lower than here. I'm not saying directionally where it's going, I'm just giving you probabilities. It's cheap. It's cheap. In dollar terms, it's cheap. Let's look now at silver again. Remember, silver did not beat the record month of 2011 relative to the exponential trend, which is a straight line on log scale. So 77, whatever it is now. Let's look in Bitcoin terms. Okay. Still cheap. Still almost the cheapest that silver bugs can get for Bitcoin, but not entirely. All right, we still have bounced off that low of 718 ounces back in end of January. So long ago. Is that the absolute bottom? I don't know. But what I do know is silver bugs are getting a fantastic bargain on Bitcoin right now. I want to do a quick analysis on the curves again. This was a good comment. What invalidates an asset to no longer be a power law? Does it have to trade outside its outmost thresholds for a sustained period of time? All right. My answer was, as a non-statistician, sort of an applied stats guy, the quick answer I'd give is whatever data fits the regression format, expo or power, traditionally with financial assets, better will likely have a higher R squared. I'm sure there are exceptions to this, but basically that. So again, as you guys know, I like to follow the Bitcoin power law. This is a good looking curve. There's a lot of people that are fudding right now because we're falling quite a bit down, and we just look at the percentiles where we are, 30, 40th percentile, 35th percentile, 30% of the time it's been lower. I mean, 70% of the time it's been higher, but people really, think this is going crazy. And in particular, I notice people that just cannot even think in power law terms, which is a straight line on log-log scale. They're thinking in exponential terms. They can't compute what Bitcoin is doing. So here would be my answer. Again, power law, power trend, power curve, 96% R squared. I know I've showed this a lot to people familiar with this channel, but it just bears repeating. An exponential curve, if an asset is truly exponential, it's going to fit better with a straight line on log scale. All right, so we can do both. I can run both regressions here. And here it might look okay, actually, right? Bitcoin might seem like okay, kind of following an exponential curve. But if you back it out, and even if you just look at the projections, you'll see that it doesn't make sense, right? If Bitcoin was an exponential asset, it'd be $850,000 right now, instead of the closer, still far, but closer, 130,000, which is what the power curve says right now. And you would think we would have at least intersected with the line once before, the puking of 2022. And then people say, well, it wasn't an exponential before, but maybe it will be an exponential. That I actually would concede is possible. But that would actually be a good thing for price for Bitcoin. And it would take in probably where we have been and then at some point keep going on a different level. So that could be like if we turned exponential here at a 42% growth rate, then it would be a straight line like that. Or later in 2035, be a straight line like that. But this is way speculative. I have no idea. Maybe. It's a completely speculative idea. And I don't want to go too far down the rabbit hole of what that means, power curve versus exponential curve. And in my opinion, there's going to be a lot of fiat interest behind Bitcoin if it turns into one of these curves, which again is Bitcoin's going to do both, and Bitcoin's going to do well in both scenarios. But I would not say this is a good outcome. A better outcome is a power trend, which is how networks grow. And then, as I've showed often, we can draw the trend from different times based on different data, and it still looks pretty awesome. So here, I'm only taking the data from here back. So only this pricing data I'm drawing with this trend. And if you sort of notice, this trend looks almost identical to this trend, which includes 10 more years of data. It's actually a mind-blowing thing, if you think about it. And the difference is $7,000 in projection. Yeah, they're both off. They're both high right now. We are under trend. But a 2016 power curve would project us today at $136,000. If you take all the data, 10 more years of data, we get 129,000, or sorry, 127, I guess. Wait, what is it actually today? If you take all the data, you get 130. $7,000 difference. So again, in the spirit of trying to have comfort during these down days, we could go lower. Like I tried to show in this chart, I mean, it's rough days. We could go, we're not as fast as the 2017 drop, but we're faster than the 2022 drop. We could go lower. Sorry, where's that chart? We could go down here. But probably the faster we drop, the better. Because Wall Street knows about the power curve now. It's not a secret anymore. When Giovanni and I were writing about it back here, it was sort of, nobody really thought that an asset could follow a power curve. Now everybody knows about it. It's not a big deal. So Wall Street knows about this guide. And I would say that it is a good guide to keep in mind. Possible. You have some TA on that analysis? Again, this, which is not TA, but just shows you the relative risk. 66 for now is sort of a number which is 50% below the power trend itself. Maybe 66. 65, which, as you know, get to that 130-ish area on the power curve. So, so that's that. And again, stock to flow does not do this. You're not going to have this, here's the stock to flow from 2016. Here's the stock to flow from 2026. And this is not Plan B stock to flow. This is mine, which is just showing you only stock to flow data. You see we're way off. 300,000 for all time, 360,000, 600,000 for the 2016 stock to flow. Plan B's numbers are more insane than that because he was using gold and silver coefficients, which would just completely screw you up because those are exponential assets. So his 2020 model projects $6 million Bitcoin right now. 2019 model, 800,000. Not a good model. Even though you can intersect it, look, like his 2019 actually kind of hit it. I'm sure he's doing a lot of tweets during that time. But it's an asset. It's a model that is skewed by exponential things, basically stock to flow. So it doesn't just look at the raw price data, which is more scale invariant would be the word. So it always sort of stair steps away from the price. I'm sure the price will hit some of these numbers at some point again, but eventually it's going to stair step away higher. And that's it, I guess, with that to that question. I don't think that's a bad idea. I think this is great bargains. Let me try and hold on, let me show you guys this. So again, For the silver bugs, fantastic bargain. For the gold bugs, not quite as good a bargain, but still pretty good. Which I'll show you in a second. And going back to this, I would say yes, sir, Fred. Good to hear from you. We have a call together in a couple hours, so looking forward to it. You know how Bitcoiners love discounts, whereas gold and silver bugs, they're going to like the discount, but they're waiting. They're calculating that 7% commission that they got to give as well to, whenever they want to unload it or not. Yeah, I have no problem with gold or silver. It's fine. It's fine. It's a fine asset. I'm happy for you if you're in this level. All right, this is the top of Bitcoin right here. Down 40%. So back to my little analysis at the beginning of the episode. Do we crash 80%, 70% like we did in the prior cycles, or is it much less because we have so much of a different cycle here in 2022, 3, 4, or 3, 4, 5, where we just sort of cruised along the power curve. We did not get up to the 9, didn't get to the 8. We did hit the 7, which is the 70th percentile. But if you look back at the other cycles, whoops, sorry. Extending over those levels took well, you got to show the 9 to show how quick it was. Very quick. But we stayed, a healthy, even a healthy year above it, above the 70th percentile in 2017. And in 2020, even a year and a half. Whereas this cycle, we just scraped it. So all those things, again, I never financial advice. I don't know the future, but relative risk, getting down to these lows, I will admit, seems less likely to me, but anything is possible. Let me know if you guys have any questions on these charts. I have a couple more. Can't be too long today. This is the ammunition that Trump has with his inside baseball Fed chair. All right. QE 1, 2, 3. Fed's balance sheet as a proportion of U.S. debt. Back 10 years ago, it was 24%. That was a record. It fell. Repo spike. COVID spike. Back up to a new record, 28%. Powell does the hard work of deleveraging the balance sheet for 3 years. 4 full years, I guess. Well, it peaked right here. Yeah. Never got over 9 trillion. It was close to getting to 9 trillion. 3 full years, they took it down. So if Donald Trump wants lower interest rates, he's probably going to get lower interest rates, which usually is going to mean more money printing, which usually eventually means higher Bitcoin prices. But again, as I always say, check the power curve for relative risk, not necessarily the money supply. Also, you see here, even though this is a monthly chart, you can see the percentage just sort of bottom out as 16.3%. And it's probably going higher. More monetization of the debt. This green line is literally monetization of US federal debt. All right, from nothing when the Federal Reserve was founded, it was just debt, to 1 cent on the dollar, 10 cents on the dollar, 15 cents on the dollar when Vietnam War ended. I'm not saying I defend all this. I'm just saying they have room. Miner revenue. All right, the vast majority of this is new coins. Miners also get fees. These are daily fees plus new coins in dollar terms. All right. What I do think, again, which is bullish to me, which is fishy, is, we have a big spike here in 2017. Let's say way ahead of our skis, 44 million a day. And here, get, again, way, way fast, way higher, 50, 60, 70 million, even a couple days. I can't pick them up. This one is 70 and that one's 80. All right, again, twice in 2021. And then we have it just before the halving, again, a few 70, $80 million days. And then after the halving really takes the wind out of the sails of miners in dollar terms. Now we're at $30 million days. Right. The clear trend is, of course, up, and it's up with the price. But it is surprising to me that this bull run, which took 3 years, never really had a lot of days that were above this spike. And you can see that if you back this out to yearly revenue, you can see that. And I could be wrong, but I still think that this is the best chart to show you the cycles are not over. Because every cycle, this is usually a multiples higher. Take the daily off so you're not confused. All right, $17 billion a year for miners here at the end of 2021. Multiples higher than it takes a long time to work this out, but 6-7 billion a year, which they made over the course of end of 2017, 2018. Now we've been stuck at the same level. I could be wrong. I mean, this could be a full cycle and we're going back down for another year. But from what I see here, you would expect each pump to be higher. And since it's not, then maybe the cycle's not over. Maybe even this is just a little bit of a bear and a secular bull. Maybe. Oh, we'll hold off on Ukraine stuff for a second. Let me know if you guys want to see any other charts with that. I was informed of this post yesterday from Nick Carter. I know Nick, obviously super smart guy, investor. Just read it. Bitcoiners need to realize I'm not a critic that can be dismissed through the traditional means. I've been around forever. I know exactly how everything works. He's talking about quantum here, quantum risk. No one has leverage over me, so no one can shut me up. And I have the distribution to get my ideas out there. I've done the work. I have the receipts. I'm not speaking out of ignorance. I have just as much information as anyone. I'm used to Bitcoiners yelling at me online, so that doesn't work either. I don't care what Maxis or anyone else thinks. I'm a Bitcoin. I'm motivated by the desire to make it better. I don't exactly know all the information that he's talking about here, but my buddy Fernando, old podcaster, he put something funny. He said, he's like, I've seen rage quitting, and I've seen rage I'm not quitting. It's something to this. I guess his latest take is that Bitcoiners are not taking this seriously enough. So again, I wouldn't defend one way or the other, because I'm not a core dev, and neither is Nick. But it is interesting when you've been around Bitcoin enough. And look, I don't have a big following. I don't really care. I just show you guys network data and price data as I get it. But it is interesting that there's been a lot of times in the Bitcoin space where you get people that aren't, let's say, directly exposed to a lot of the code development that tend to sort of rage quit. This is certainly not a rage quit from Nick. He's a smart guy. But I just wonder if there's like a short-term sort of impetus here, or if he's just going to rage on everybody for 10 years about quantum. It's an interesting thing. Or does he see weak markets right now and he wants to make them weaker, and he wants to see if he can move the markets? I don't know. I saw this interaction with Matt Corallo, and Nick, you guys can read it. But anyway, my 2 cents there. Nick Carter is, I think, Nick_Carter. He's not this Nick Carter. He gets tagged sometimes. If you know who this is, maybe some band. Who is this? It's funny. So yeah, that's my thought there. Hello, Sandro. Some comments here. He has said for sure that he has a vested interest, which is just funny. When you're not, when you don't have Twitter on your phone and you just blissfully sleep through the prime time rages that you guys have in North America, it is funny. I mean, I first met Nick maybe 2017, 2018 at a Honey Badger. We did a couple panels together. He's a shy guy smoking cigarettes. I respect him a lot. I just think it is interesting. Like, did he bring this on himself? I really don't know. Is it, or is he seems there seems to be a thing he was talking about with Corallo, that he just does not like the gatekeeping of Bitcoin devs, which is again an age-old debate, which it's like I can't even comment on it because I'm not a dev, so I don't really care. But quantum is something to take seriously, that's for sure. I almost wonder though if you make a post like this, it's like a rage quit, but you're not quitting, as if you actually think you can move the markets. He did do some fighting, didn't he? Uh, oh, it's Backstreet Boys. Nick Carter's the other one. He only has like 500,000 followers. That's not that much. The other Nick Carter. Don't confuse them. I mean, I'm not one to speak because I'm not a tweeter. Oh, 640,000 for the Backstreet Boys, Nick Carter. Anyway, um, so yeah, that's that. A couple of things on my end which I do care about. Just want to show you guys politically. Not a rage Friday. Not going to rage on Ukraine, but if you are wondered if Donald Trump has the situation under control or Vladimir Putin respects his energy ceasefire, record number of drones past couple nights. And German intelligence a couple months ago said Russia plans to put 2,000, they want to ramp up to at least 2,000 drones a night on Ukrainians to break them. So, again, I'm a trends guy. If you guys think who's running who here, especially in light of the Epstein files. If you think Trump's running Putin or Putin's running Trump, it's up to you. Casualties are, stagnant for them. They have the meat wave now. The front is totally locked down on both sides. Drones just take out anybody basically if they're moving on either side. But Russians don't care about human lives, so they just send people over. It's really wild. One of my favorites, just if you want to watch, this is a mainstream news channel, but I saw the a U.S. news company, CBS, interviewed Radoslaw Sikorski, who is the current foreign minister. I'm a big fan of him for strong Europe, so I'd recommend that one. And just in case people forget, United States hasn't put a dime into Ukraine for over a year, so U.S. taxpayer can be happy. Europe continues to finance. About 100 billion more is pledged. But I don't think Putin's going to stop unless we stop him, unfortunately. And Ukrainians are not asking for bodies, just money. As an Eastern European, I can tell you it's just wild to see this. One more thing about the Epstein files. I'm sure your guys' feed might be different than mine. I've been seeing a lot about all the Russian connections, which, again, to most of us was pretty obvious. This guy, Dave Troy, from the Washington Spectator, has been commenting on them a lot. Again, this is stuff that doesn't overlap with Bitcoin, but I did notice this one. Russia created Epstein. Again, I don't know if I'd go that far. He had a lot of, I think, good points here, but this point about Russia created Epstein, his first and foremost point, Epstein was first and foremost about Epstein. I think that's correct. His money, real estate, travel, whatever. Whatever intelligence agency he worked for. But I thought this was actually a good point. Is Russia created Epstein, Russia exposed Epstein. This is a clear strategy of demoralization. No one has heaped more praise on Representative Thomas Massie than Russia's proxies. Very important to understand. No one has heaped more praise on Thomas Massie than Russia's proxies. The hope is that we lose faith in elites, in government, in democracy. This sets the stage for escalation. We should be careful about falling for this trap. So this is standard, Yuri Bezmenov. I talked with Marty about this on the show. This is a standard Russian MO. Just pile on shit from all sides. Make you hate yourselves. This is why they fund Jill Stein. This is why they fund Marine Le Pen on the right, Jill Stein on the left. This is why, Tenet Media, all these guys, they don't necessarily care about your view in a free world. They just want you to hate yourself. That's what they want. So just keep it in mind. Again, I'm not on a big disinformation crusade, but we know our neighbor here. So very interesting. A lot has come out. I mean, you guys probably haven't noticed, but you know, the local news here in the Baltics. I mean, there were Baltic girls that were being trafficked. Um, it's unbelievable, this guy's pull. And I don't know if he says it here, but he went to Russia. Yeah, Epstein went to Russia repeatedly over the course of at least 20 years, multiple visas. One of the visa, as it says here, was Organization for FSB Veterans. One of his visas. So you can't get this basically without FSB cooperation. FSB is the successor to the KGB. So I find this story quite interesting that finally the Russian links are coming out, which we've been talking about for a long time over here for 30 years in Eastern Europe, but maybe the West will finally start to understand. They just don't care. Their goal is to infiltrate, whether it's honey traps, whatever. Sikorsky talked about this as well in the interview. They just don't care. They want to ruin democracies. You know, one of the interesting organizations or entities or polities in the history of Europe, as I've always said, is the Polish-Lithuanian Commonwealth. It was basically modern day Lithuania, Belarus, Ukraine, and Poland. Around, if you look at a map, that's what it was. And, you know, from Catherine the Great on, actually even earlier, I'm sure, but from sure when Catherine the Great started in the 1700s, it was Russian doctrine to interfere in the politics of this polity. They had something called the liberum veto. So it's not like a democracy. I'm not going to say it's like the best thing ever, the Polish-Lithuanian Commonwealth, but it was a democracy of elites, kind of. There was like 20% people had a vote in the Polish-Lithuanian Commonwealth. Of course, they still had, you know, peasants and everything. It wasn't like a full democracy, but they had this thing called the liberum veto, and if anybody in the Saima, is the Latvian word for it, the Seimas is the Polish word, or Seima. Seima is the Lithuanian word. Saima is the Polish word. No, Same is the Polish word. Anyway, the parliament. If anybody came to a Sejm, to a parliament, and even one person vetoed, you know, said we don't want to change the tax code, we don't want to change this, that, this, the other thing, then nothing would happen. And that was sort of a paralyzing effect. But that's what they, you know, that they thought that was like the best thing, was to have the most limited sort of governments. You had this liberum veto, and Russians, it's quite documented that they got in to screw up the polity, the politics of that system in the 1700s. So it's really nothing new. Europe knows what it's about, but I think Americans are experiencing this now just firsthand. They're not Nick. I'm not saying there's Russian disinfo in quantum. Maybe there is, but with the Epstein files, it's. And I actually think what's really good for Europe is Europe has been saying, look, we're not going to stand for this. If there is minor trafficking, sex trafficking, you know, people are going to be tried, be prosecuted. Like there's investigations now in Europe specifically because of this release. And, you know, Trump says he wants to move on from it. So, anyway, I think it's highly interesting what's happening with the Epstein files. That's Dave Troy, by the way. And I talked about it on Monday. You know, it is a bit depressing because Bitcoin gets wrapped up in this because Epstein added to his obituary, he wanted to do a BRICS shitcoin with Russia. I mean, what an embarrassment on all the things. Uh, I mean, obviously, shouldn't be surprised, but of all the things this guy could do, he wanted to create a BRICS cryptocurrency. Da, da, da. Other one to show you guys, and again, I'm having a lot of effort from AI and some key players here to try to bring you guys a good subscription-based platform of this stuff. One second. Of say this stuff. Well, we can look at the monetary base in full. Remember, monetary base can go up, Bitcoin can go up, monetary base can go down, Bitcoin can go up and down when it goes up. It's not you can't perfectly time it. And I know a lot of people in the anarcho-capitalist libertarian Bitcoin space don't like the word democracy, but every state is going to fight for a piece of this pie right here. This is the world monetary base. So I'm just showing it now with the relatively free world versus the relatively communist authoritarian world versus the global south, by the way, which is huge. India is here in the gray. Pakistan, Vietnam. I could move Vietnam. I mean, Vietnamese like Americans, so, which is a wild thing after that war. Nobody's going to give up. Everybody's going to fight for every share of this pie. So I'm quite bullish at the end of the day. If this drops, another 20%, 30%, this is where we're going. $27 trillion. Bitcoin right now is what, it's probably under 1.3 trillion now. We'll line it up. Just quickly on silver, or sorry, on gold, Bitcoin gold. Again, a great governor of digital sound money is looking at it against physical sound money. Super cheap. Super cheap right now. 14 ounces of gold per Bitcoin. I am on record with this one that I do think this is going to be the bottom if it hits it. And I don't think it necessarily hits it. All right. Already back in 2022, it was 9.5 ounces of gold per Bitcoin. Something's going to shift here, whether it's Wall Street, whether it's JP Morgan's holdings of silver or Wall Street gold ETFs. You're going to revolve out of some of those gains, especially if you understand the power curve of Bitcoin. But we'll see. I like it. There's no question that gold and silver, you could say, are making up for lost time, especially even in the last, right, 7, 8 years. I think it's a fine argument. But again, at the end of the day, particularly if you look at what they do over the long term, it's nothing more than just standard exponential growth, which is a straight line on log scale. It can be pretty wild, right? So it can be, if you follow this, it can be a way faster trend like it was in the 70s, 80s, and it seems like we're on that now. And then it can be a disastrous 20-year downtrend, which it was. Then it can be a faster trend again. So you get this dotted line, which is actually what was happening to this solid line, to where you put all the data in. Remember what I was saying before about the power curve 2016 versus now? That's all the data from silver since 1971. It's way over trend. Doesn't mean it can't go higher, but these are the levels. So anyway, I know I probably sound like a broken record to you guys, been following for a while, but I do probably think the gold Bitcoin price, the silver Bitcoin price is going to be the most interesting over the next couple of months, because I mean, these are potential buyers of Bitcoin right here. Let's go back to I mean, it's almost like you don't have to do analysis. Okay, I got no problems with gold and silver, but it does this. It just does this. And I would not want to be the person that buys Eric Sprott's share from the Nevada gold mine story I showed you guys about back a while ago. That just like he bought it a couple years ago. Now it's worth like 2 or 3 billion. You know, a mine that would not be profitable at any of these prices. All right, this is an index. It's not the actual price, but it is more profitable at this price, and it just does not exactly look like something that it can hang out at for a long time. But yeah, what is interesting though is, you know, I would say as a function of, you know, a basket of assets, say, well, even from here you can see it dominates, but say from, let's just say from 2017, as a basket of assets, wait, that can't be right. Let's go. Again, I told you this was going to be buggy. Let me reset it. As a basket of assets, that are store of wealth assets, Bitcoin, over the shorter term, is competing poorly. Gold and silver are competing quite strongly. But you got to back out, look at the power curve, see what Bitcoin was doing in terms of silver. You know, it cost you 30 ounces 10 years ago. 30 ounces of silver to buy Bitcoin. Now it costs you 1,905 to be exact. These are the trends to calm the Malox moments, my friends. But I guess we got to worry again about quantum. No, I shouldn't be too hyperbolic. I like Nick. Honestly, I like it, but as this was brought to my attention, it does seem like a little bit of attention seeking, but hey, this guy's on a mission. I just want you guys to not have Malox moments, so we'll see. All right. I got to run today. Got to play with the kids. Hello, Coop. Yeah, I think so too. Seems like it, at least. But we'll see. I don't think anyone is downplaying the risk, but it is what it is. Thank you guys for watching. See you tomorrow. And just relax. This thing could go, you know, could go down to 10 ounces of gold. It's possible. But this thing trades on a trend for a reason. So we got to keep investigating it, keep studying it, and stay calm about it. 95% R squared, gold, Bitcoin, or Bitcoin gold chart. So thanks, everybody. Have a good night if you're in Europe. Have a good day if you're in the Americas. Take care.